Hi, everybody. It's Jason Massey. If you are an in-house tax person, I want to invite you to our Q2 Best Practice Roundtable. It's coming up on June 18, 1 hour free CPE. Three speakers, Jeff Muller, Steve Whitaker, and Jamie Bond. I guess I'm the fourth speaker. We are going to cover a wide variety of issues, from the Park, Ohio case to the Kyocera case, to the IRS challenging cloud hosting costs, to the new form, to Little Sandy. So please sign up on our website. It's going to be an amazing webcast. Now, for the real purpose of this message, we have received a lot of questions regarding the One Big Beautiful Bill Act. So I wanted to share some thoughts with you. Now, this act proposes to roll back domestic capitalization of R&D or R&E expenditures under 174. Hooray! We finally might get the bill passed. If it's passed as currently drafted, what this is going to mean is that if you for tax years beginning after December 31, 2024. So a 1/1/2025 to calendar year company, we don't have to capitalize things potentially if the bill goes through. Couple important things. We don't get away from doing 174 studies because foreign R&D expenses are still subject to 15-year capitalization. Boo. But if the bill passes, we also have to explore 280C because we think that's going to make everything revert back to the way it used to be, which means that beautiful, big, large credit, gross credit that we've been able to claim the last few years is going away. And so we'd be back to the 79% credit rather than the 100% credit. So you got a 21% haircut. So if you're modeling this credit for 2025 estimated tax payments, I want you to be conservative. You need to go ahead and, if you're going to model the benefits of maybe not having to capitalize, which would certainly be a cash flow savings to you maybe on your Q2 payment, I also want you to reduce your research credit. So don't just take 24, go ahead and reduce that so that you're basically going to have the reduced credit under 280C. Take those into account if you want to adjust your Q2 quarterly estimated payments. For a lot of you, I'm suggesting that's not a great idea. You'd probably have to play catch up in Q3 to the extent this bill does not get passed. I've also been asked whether I think if the bill does get passed, does anybody want to change the 174, the 280C provisions as they've been drafted? I don't really think so. This has not been something that's been subject to a lot of discussions over the last 5 or 6 months. It just doesn't rise to the level of having either Republicans or Democrats be that excited about it. Everybody loves it. It's bipartisan, which is great, but do they really want to strike particular provisions related to those two things? I don't think so. So if the OBBBA is passed, it's probably going to include this 174 280C fix. I just wanted to make you aware. The only other thing that I think is relevant, people have been saying, Jason, are there some planning tips? Well, with domestic costs now being able to be expensed, that's great. A lot of you guys have foreign contractors and foreign employees who are working on R&D issues with U.S. people. That would be capitalized. I don't know whether you're going to be able to move that back on shore. For a lot of you, the 15 amortization that you expend is going to be still a lot less than the cost of maybe moving a job from one of those international sourced vendors or contractors back to the U.S. So I'm not sure it makes a lot of sense to do planning. This is also, just to make you aware, this is only in place for 5 years. So it's for expenditures incurred after the tax years beginning on December 31, 24 through and before January 1, 2030. So it's a 5-year fix. It's just too expensive to make this permanent. So we're going to keep you updated on these things coming out of Washington. Never a dull moment. But if you would like to talk to us personally about your tax situation, R&D tax situation, please give me a call. Thanks a lot.